If you've ever had to wait weeks or even months to get paid by your customers, you know how tough that can be on your business. That's where receivable factoring comes in. It's a smart way for businesses to get fast cash by selling their unpaid invoices to a factoring company. Instead of waiting for customers to pay, you get most of that money up front, usually within 24 hours. The factoring company then collects payment from your customer and sends you the rest, minus a small fee. Here's how it works. Once you've delivered your product or service, you submit the invoice to the factoring company. They give you a cash advance, typically 75 to 90% of the invoice value. Then, once your customer pays, the factor sends you the remaining balance after deducting their fees. Speaking of fees, they typically range from 1 to 5% of the invoice amount and can depend on how long it takes your customer to pay. So, while you get fast cash, it's important to factor in that cost. Now, there are two main types of agreements. With recourse factoring, your business is still responsible if a customer doesn't pay. It's usually cheaper. Non-recourse factoring, on the other hand, shifts that risk to the factoring company, but it costs more. So why use factoring? It improves your cash flow, boosts working capital, helps you avoid debt, and even outsources collections, freeing up time for your team. Plus, you don't need perfect credit, since approval often depends more on your customer's creditworthiness. But it's not without downsides. It can get expensive over time, and using a third party for collections might feel awkward with certain clients. That's why choosing the right factoring company is crucial. Look for one with industry expertise, transparent fees, and solid customer support. Receivable factoring is especially helpful for industries with long payment cycles, like trucking, healthcare, staffing, and manufacturing. It gives businesses the flexibility they need to stay steady and grow, even when cash flow is tight. In the end, it's all about finding the right fit for your needs. If you need fast funding without taking on more debt, receivable factoring could be the key to unlocking your next phase of growth.